Let's get right to today's action. We've had a lot of it. We've got Brett Valome, Fig Partners research analyst, who says prepare for a pullback. Well, you got one today. Larry Hilzenrath, Genspring Family Office's director of research, who says there is one indicator that no one is talking about that could determine when the Fed tapers. And of course, Mark Sebastian is in the pits of the CME. Mark, I do want to start with you. What a day, especially when you look at the swings in Treasury prices, the volatility there, the dollar, gold. What was the top on your radar today?
I mean, with the dog that is wagging the whole market's tail is the 10-year Treasury note, and they got slaughtered today. And that's what drove everything. So we're in a really weird scenario right now. We've got equities and bonds correlating. That is a broken market right now. That is not the way they traditionally work. And until we get that normalized relationship where bond prices rally, markets fall, and vice versa, we're going to be stuck in this kind of weird, not sure what's happening. But I'll tell you, we had a nice run up into this Fed announcement and a relatively predictable sell-off. It would buy the rumor, sell the news, and the news was kind of what everyone expected. Hey, the market's getting, the economy's getting better. We can't do this forever. 2014, 2015. But, I don't know what was going on ahead of the meeting. I think we had some delusional people that looked at that non-farm number of 175,000 and said, well, maybe the Fed is going to change their tune, which they didn't. If anything, they got a little more rock solid on their tune.
Well, Larry Hilzenrath, and we should emphasize, no relation to John Hilzenrath from the Wall Street Journal, who is listed today, by the way, as the guy behind the throne. We're going to talk to him a little later. But let's talk about interest rates specifically. The big question, one thing that Ben Bernanke said in that presser that really shocked me, he was asked about the rise in interest rates over the past couple of weeks, and he said he was, quote, surprised by the rise. Now, I'm wondering whether he really is beginning to wonder whether he can control those interest rates. What do you think about that? Are interest rates controllable when you see what happened to the yield in the 10-year today?
It's a good question, David. People have to keep in mind interest rates of a sovereign country like the United States that is a producer of its own currency. Interest rates reflect investors, market participants' anticipation of growth and inflation. And that's what they reflect. There are going to be some short-term gesticulations of interest rates around those feelings. When the Fed's involved, the Fed can push things around, especially on the short end of the curve. When they're twisting, they could push things a little bit. But if people anticipate that growth is going to be higher in the future, or that inflation is going to be higher in the future, they're going to sell bonds and they're going to invest in something else, and that's going to push yields up.
So you're saying regardless of what the Fed tries to do to change them?
Regardless of what the Fed is trying to do, and if the Fed is anticipating that things are getting better, then the Fed is going to be fine with those rates going up, as long as it's for the right reason, which is an increase in expectations of growth, which is what the Fed is trying to foster through their policy. So this is not a negative event, and I don't think there's any Fed panic going on because rates went up today. They went up for the right reasons.
Brett, we got a little more than 1.35% drop on the Dow today. You were calling for a pullback going into today's market action. You got a heck of a pullback. Are you surprised by the numbers that we saw going into the close?
Well, I'm not surprised by the pullback at all. I mean, this market's done really well. I think a lot of people don't realize just how well it's done. The S&P from the November low, the last intermediate term low, is up 22% going into today's news. So this pullback, it makes a lot of logical sense. We're right at support, and I think that it's logical at some point we're going to see a correction back towards the long-term angle of the uptrend, the one that has been in force since 2009.
So, Brett, wait, you're looking for more of a pullback than what we just got today. You're saying that we're going to get more of a correction.
Yeah, and we've seen some short-term corrections within this very consistent intermediate-term uptrend that we've been in that peaked out, last month. But nothing that's going to actually realign the long-term angle, which is going to be sustainable. I'm actually a long-term bull on the market. I agree with Larry. I think that this is a healthy correction.